Hello and welcome. This is Gordon De Silva, and this is a little briefing for our clients who are directors of their companies. It's not for other employees, it is really only for directors of their companies. So let's just quickly look at the backdrop for this. I'm just going to scroll down the page. The first thing we want to look at is that there has been a change in dividends, and the tax on dividends has increased by 7.5%, which on basic rate taxpayers is a 33% increase. So it's quite significant, very significant in fact, and you can tell by the lack of noise in the press that no one really cares other than you and I. You as a client paying the tax, me as your accountant trying to avoid you paying huge taxes. So that's the first thing. The second thing that is relevant for this purpose is that there was a £2,000 national employers national insurance, and this is national insurance, not tax. Is the employers section only, and that was £2,000. That is now going to £3,000. However, it's not for directors own company directors who don't have any employees, and it also applies director companies are excluded, and that includes husband and wife companies are also excluded from this allowance. So whereas before you would get £2,000 from 6th of April 2016, not only do you not get the £2,000 or the £3,000, you get nothing at all, and you'll pay full tax and national insurance on all of it. So that's the backdrop. So we have got three scenarios here, and on your specific email, when you get your email with this video link on it, you will have an option that we recommend for you based on our understanding of your position. Now that means that, if we don't believe you have any staff, for example, and just husband and wife running the business, then or even just one person running the business, then you will be excluded from the £3,000. You'll get advice based on that. If you have employees, as far as we know, then you will be allowed to claim the £3,000, and so we'll give you slightly different advice based on that. Okay, so let's get started into the three options. So we're looking for directors of close companies. These are companies with 5 or fewer directors owners, typically family companies, with no external employees. And so you can see we've done the payroll at different levels from 8 to 14,000. The key thing here is we're looking at what we call tax leakage, and that is the amount of taxes you pay on the total salary based on normal tax codes and national insurance codes. And you can begin to see that, and remember, most of this is going to be national insurance at the early stages, because your tax-free allowance is over £11,000. So really we're concerned with really the national insurance. And we can see that if you have no external employees, so if we just start with £11,000, which is our default rate, you can see that the tax leakage, mainly national insurance, because there's no tax, you can see here, national insurance employees and employers, is going to total £750, which is 7%. Now, if you take any of this as dividends, because you will be paying the dividend tax of an extra 7.5%, you can see that at £11,000, with no employer's allowance, that it makes sense to pay £11,000 and pay 7% national insurance for a couple of reasons. First, the 7% you're paying in national insurance is less than the 7.5% dividend tax. Just, I admit, but it's less, and so that is a good starting point. The second thing is, for pension purposes and for employment purposes, this counts as a bit of a contribution, doesn't it, to national insurance? So again, it goes into the right bucket. For salaries, for pensions and stuff, you get a slightly higher salary. Now, If you didn't want to pay any national insurance at all because you were off the mind that you'd rather not pay anything at all, then obviously you'll pay £8,000, but that would mean that on your dividend that tops that up to whatever your figure is, you would pay extra dividend tax. Now, if you're against paying any tax at all, you would pay the 8,000 any tax or national insurance. You know me, I believe national insurance is just another name for tax, except the Parliament, the politicians don't want us to see it that way because it would upset us too much. I'm upset already, so it doesn't make any difference. So at £8,000 you'd pay nothing. At £9,000 you'd pay 3% national insurance in total. At £10,000 you pay 5% national insurance, but at 11 you pay 7%. And like I said, that is the optimal where you're saving. Even at you're saving all of this, of course, but at the top end you're saving still 0.5% on your dividends. Okay, so if you are a small family business and you have no employees, we're going to recommend a £11,000 salary for you, and that will be highlighted on your email. Now, if you go down to directors with external employees, because you get some national insurance back, we can take you up to £12,000. Now, the reason we can go up to £12,000 is because we're still at 6% national insurance here, and that's a better deal than paying the 7%, right? So we're looking at making sure that you pay less than 7.5% because you're going to get some employers' national insurance deducted. Now, if your employees are earning lots of money and your employer's national insurance is over, a long way over £3,000, then you may still want to default to the £11,000. However, because of the rates, we're going to be recommending the £12,000 salary for you. Now, you may ask, is it worth paying salary rather than dividends and paying the extra 7.5% rather than paying the extra 7.5%? The answer is possibly, but only when you get to salaries of over £150,000. Up to that point, dividends are still the better bet, and so we're still sticking with the dividend strategy, although it's going to be a lot more painful for anyone drawing dividends of over £5,000. You get a nil rate band of £5,000 in dividends per year per person. Anything above that gets taxed at the normal rate plus an additional 7.5 pain point. So let me leave you with that thought, and let me have your instructions as soon as possible. As our normal policy, we will not run any payroll until we have your explicit instructions on what salary to put you on, depending on whether you're quarterly, annually, or even monthly if you have employees. So let us know as soon as possible, and until then we will not be able to run your payroll for you or your team. So it is important we get that information, because the software just won't let us close half of payroll off. We have to close either all or none of it. So thank you for that, and please reply as soon as possible. Cheers. Any feedback on this video, let me know. If you have any questions, of course, let us know, and we'll help you through the decision. Thank you.